Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Is there semi-panic in the equity markets right now? Will the U.S. impose massive tariffs on Chinese products or not? Is that really got traders worried?
It does. You know, it's there's a lot of stress in the market. There's a ton of talk of what's going on with China, and you know, it's not just the tariff potential and the importing and the exporting. It's their housing market is starting to show signs that the bubble is getting thin and getting ready to pop. China's got a lot of headwinds coming its way, and all this talk has definitely got the markets on edge. As soon as Trump says something about tariffs, the markets go haywire, and they either drop or they rally huge. And it's just been a big seesaw of massive volatility and price swings, and we're seeing big waves of panic selling and then panic buying in the market. And really in the last 10 days, almost every day the market has had a major swing to an extreme level of either panic selling or panic buying on the NYSE. And that's just when the majority of people, an overwhelming majority of people, are either all buying shares or they're all dumping and selling shares. And this is a sign that the market is very nervous. And you know, we've got tons of news. It's a wall of worry, and the market likes to climb and rise through a wall of worry. So the equities market, to me, is setting up for what looks to be a very beautiful bottoming formation. A big rally, I think, is going to come out of this and catch a lot of people off guard because people are very bearish at this point.
Is there any one sector that seems to be the most vulnerable to this? A real wild card would be the transportation sector. If tariffs become a major issue, they've been underperforming that sector for a while. It looks like it's on the verge of breaking down. To me, that would be the one sector that if tariffs get imposed and there starts to be some more trade wars here, that would be the sector that could get hit really hard and break down. And the fact that it's kind of underperforming and looking really bearish isn't an overall good sign. Typically, the transportation sector will be one of the first sectors to start rolling over, showing signs of weakness in the late stages of a bull market, which is what we are in, and that's what we're seeing. So that's the one to keep an eye on, and that one you got to be very aware of, that if news comes out with tariffs, you could get some huge price swings in that, and if it does break down, it's going to be definitely a major warning sign for the U.S. equities market. Is there a lot of hope that the U.S. and China can talk their way out of this before they start really slapping major penalties on?
Everybody's got hope, but who knows what Trump and China will do? They're two wild cards, kind of bashing heads. So who knows? I don't know. I don't follow. I don't put too much hope in anything political. Period.
So where should you be putting your investments right now if you've got big concerns?
You know, it seems pretty simple when you look back, but really the large cap stocks like the S&P 500 is actually, to me, looking like it could be one of the sectors that is going to outperform. It's the big brand name stocks, it's the big companies that when everyone gets bullish in the stock market, they go to their mutual funds or their hedge funds or their basic ETFs and they buy into the market, and it's all these stocks. The small cap stocks look primed and ready to go, but they're also usually an early kind of sector that rolls over with transportation. And the NASDAQ is very tech heavy, and there's been a lot of beat up stocks and a lot of bad news in that sector. So I have a feeling the Dow, the S&P 500, those two
could be kind of the real boring sweet spot that actually could perform really well over the next month or two going forward. And all the other ones are going to have, I think, a little more of a wild card and some news-based movements that could affect them more so.
We'll have more with Chris Vermeulen right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on the gold front? Usually when the market looks choppy, people look at gold. Have they been?
Gold's been holding up fairly well. It had a nice rally early this year, and really since January, it's just oscillated sideways back and forth between a range. It has been holding up over the last couple weeks here, with this kind of wall of worry of what's going to go on around the globe here. The way gold is set up and the way that even crude oil are set up, both of them are in a way that they're just waiting for a catalyst of something to happen, and we're going to see them probably rocket higher in value. I do feel as though they could be a little bit under pressure for a couple of weeks if the stock market puts in a significant bottom and breaks out over the next couple of days, which it looks like it's about to do. All that mad money is going to go into the risk-on assets. They're going to buy stocks, equities, and people are going to forget about the boring safe plays, which, are kind of bonds, utility sector, gold, and they're going to kind of fizzle out of those. So I think the precious metals sector is going to be a little dormant for a little bit. And I think we're going to see the money kind of move into equities. But if there's something to spark a rally in commodities, it will be the U.S. dollar. And I think precious metals and oil do have huge potential for a big leg higher once the dollar breaks down.
What's the dollar precipice here? What do you think it would drive it lower?
Well, I don't know news-based. If you stepping way back, you look. The Fed's been raising rates. As you raise rates, you could see the dollar tend to rise. But if the market is very forward-looking and it kind of does things before the general public kind of catches on. And I think what's going to happen is the Fed's trying to jack up the rates, get everything higher, and so they've got some room to start cutting rates when we get into a bear market, when things start to get ugly. They need to have some ammunition. And so I think the dollar, investors in the dollar is already kind of positioned for that. Yeah, it's held its ground. It's moved a little bit higher since the January low. But really you can't see the rates going a whole lot higher. And when it only has a couple more little notches to go higher, after that, the rates are going to be coming back down. And when the rates fall, we're going to see the dollar fall. So the dollar is just kind of hanging there on a limb. And the chart looks like that as well. It's almost like a broken wing. It's a bear flag formation. And eventually it's a continuation pattern, meaning eventually price should move lower for the dollar. So I don't see the dollar really moving dramatically higher by any means. It might move a little bit higher over the next couple months, potentially, but it is on the verge of breaking down. And my cycle analysis are showing that it really only has another week or so before I think the tides turn and we start seeing more downward pressure on the dollar.
Don't people go to the U.S. dollar if they think things are in trouble?
They do, and that's the one thing that U.S. equities and the dollar have in favor of them. When things start to go south overseas, people kind of flood to
more liquid assets, things that they have confidence in, and that is the dollar, and that is U.S. equities. So I do think we could start to see some international stock markets potentially start to break down earlier. The U.S. equities could continue to hold some value and maybe even move up still for a few more months. But eventually, when the tides turn and people are dumping stocks, everything will go down. But you are right. Money will move to where they're most comfortable with, which is the dollar and is also U.S. equities. But again, once the trend is down, which it is down in the U.S. dollar, all this is a consolidation, continuation pattern, and the odds are it's going to continue to go lower, I think.
We'll have more with Chris Vermeulen right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, if there is a full-out trade war with China and the U.S., would the Chinese start dumping their U.S. Treasuries or stop buying them, and what effect would that have?
Yeah, it is definitely a possibility. It could definitely hurt the price of Treasuries. I don't know what the whole ripple effect would be, but I think it would definitely be a game changer in the market. So really, I don't know exactly how that would unfold yet, but it is a threat, and the U.S. definitely needs somebody to buy those treasuries, so it's going to be interesting to see how things unfold. I don't know. I'm sure if they were to pull that card and threaten that card more, I would hope that, Trump might not do so much tariff stuff here, but only time will tell going forward.
And if China's economy slows down, is that bad news for crude?
Yeah, it should be. The population and what they use over there is huge, and if things come to a grinding halt, man, you only need a small move over there, but it's a huge effect on demand and things. So China is definitely a kingpin, and if it slows down, the rest of the world is usually slowing down as well. So it's they're the big distributors. They send stuff everywhere. So if they're coming to a grinding halt, that means companies and have cut back on ordering, and it's going to catch up a couple months down the road to to North America, who gets the product later, or gets the product a month or two after it's been ordered, and finally sells out, and they reorder at a much slower rate. So China is kind of a leader. If they get soft, the rest of the world should get soft a few months later.
Now, crude has managed to stay relatively strong over the soft winter season. What do you see happening over the spring and summer?
Well, the crude oil chart is extremely bullish. You could argue it's already in a bull trend. It's oscillating around the breakout zone around $62 a barrel, which the high was put in back in 2015. And we've broken that, and we're just trading sideways. The trend is up on the daily, the weekly, the monthly chart. It's broken previous significant highs. I think it is in a bull market, and I think it's on the verge here of breaking out above this $66, $67 per barrel mark. And the next stop after that, with the size of pattern it has, is we're looking mid-70s per barrel for this. And we've seen two very strong days back-to-back for crude oil. And if the dollar breaks down and this trend continues, crude oil is going to continue to be on this tear, and it might not stop till the $75, $76 per barrel mark.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.